Have you ever wondered how the stock market works? Well, today, we're going to unravel the mystery together. Imagine a bustling marketplace teeming with buyers and sellers. Instead of fresh produce or exotic spices though, they're trading pieces of companies. These pieces, or shares, represent ownership in a company, and this marketplace is the stock market. At its core, the stock market is a meeting place for those who wish to buy and sell shares of publicly traded companies. When you buy a share of a company, you're buying a small piece of that company, becoming a part owner. And as an owner, you share in the company's successes and failures, its profits and losses. But why is the stock market so important? Well, it serves a dual purpose. For companies, it's an opportunity to raise funds for expansion and growth. By selling shares, they can generate capital without incurring debt. For investors, the stock market offers the chance to grow wealth over time. By investing in shares of a company, they're betting on the company's future success. If the company does well, the price of its shares goes up. And if the investor decides to sell their shares at this higher price, they make a profit. However, it's worth noting that the stock market is not without risks. The price of shares can go down as well as up, and investors can lose money. That's why it's important to do your homework and make informed decisions. The stock market also plays a crucial role in the economy. It's a barometer for economic health. When the stock market is doing well, it often means businesses are thriving, and the economy is strong. Conversely, a struggling stock market can signal economic trouble. So basically, the stock market is like a giant global marketplace for companies and investors. It's a place where dreams of growth and prosperity are traded every day, where fortunes can be made or lost, and where the health of our economy is reflected in the rise and fall of share prices. Now that you know what a stock market is, you might be wondering, how does trading actually happen? Let's dive right into it. At its core, trading stocks is like participating in an auction. You're buying and selling shares, which are essentially pieces of ownership in a company. And just like any auction, the price of these shares fluctuates based on supply and demand. When a company performs well, more people want to buy its stocks, driving up the price. On the other hand, if a company is underperforming, people may want to sell their stocks, which could cause the price to fall. The goal of every investor is to buy stocks when prices are low and sell when they're high. But of course, predicting these highs and lows is a science in itself, and that's where the true art of trading comes in. So, how does one buy a stock? Well, you can't just walk into a company's headquarters and ask to buy shares. Instead, you'll need to go through a middleman known as a broker. A broker can be an individual or a company that's licensed to buy and sell stocks through the stock exchange. You tell them what stock you want to buy, how many shares you want, and at what price, and they'll handle the rest. In the digital age, online trading platforms have made the process even simpler. You can buy and sell stocks with just a few clicks or taps on your device. These platforms not only make trading more accessible but also allow you to monitor the market in real time, giving you the opportunity to make informed decisions. But remember, trading isn't just about making quick profits, it's about investing in a company and its future. When you buy a stock, you're essentially buying a piece of the company, with the hope that it will grow and prosper, bringing you a return on your investment. Trading stocks is essentially buying a piece of a company with the hope of sharing in its success. And that's the beauty of it. You're not just making money, you're part of a company's journey, sharing in its triumphs and weathering its storms. So, happy trading. So, how does the stock market look like today? In a nutshell, if the stock market were a living creature, it would be the chameleon of the financial world. It's a dynamic, ever-evolving environment, constantly changing colors, adapting to its surroundings, influenced by a myriad of factors. One of the most significant factors shaping the market is economic indicators. These are like the stock market's vital signs, providing a snapshot of the economy's health at any given moment. They include things like inflation rates, unemployment numbers, and GDP growth. For instance, if the economy is booming with low unemployment and high GDP growth, you'll often see the stock market reflecting this optimism. Conversely, if these indicators are less than rosy, the market might take on a more bearish hue. Company news is another major influencer. Earnings reports, new product launches, changes in management, these can all cause a company's stock price to soar or plummet. And because these companies are interconnected parts of the market ecosystem, these shifts can have ripple effects throughout the entire market. Global events too play a critical role. The stock market, like the rest of us, doesn't exist in a vacuum. Political upheavals, natural disasters, pandemics, these can all send shockwaves through the market. Remember the turbulence caused by the global pandemic? It was a stark reminder of how interconnected and sensitive the market is to global events. But here's the thing about the stock market. Its volatility is not necessarily a bad thing. Sure, it can be unnerving to see those red arrows pointing downward, but remember, with risk comes the potential for reward. Those dips can present buying opportunities. And over the long term, the market has historically trended upward. It's about perspective and strategy. So in essence, the stock market today is a complex, interconnected web of factors, constantly shifting and adapting. It's a place where economic indicators, company news, and global events converge, shaping the landscape of investment opportunities. The stock market is a dynamic entity, ever-changing and influenced by numerous factors. But how can the stock market help you build wealth? This is a question that many ponder, and the answer lies in the concept of generational wealth. Generational wealth is the kind of prosperity that is passed down from one generation to the next. It's not about the here and now, but about the future, your future, and the future of those who come after you. Now let's talk about the stock market. Investing in the stock market is one of the most effective ways to build this kind of long-lasting wealth. The reason is simple: the power of compound interest. It's not just your money that grows, but the interest on your money as well. Over time, this creates a snowball effect, where your wealth grows exponentially. Imagine you're planting an apple tree. The seeds you plant today won't bear fruit tomorrow or the day after, but given time, care, and patience, that tree will not only bear fruit, but also seeds to plant more trees. That's how compound interest works. Your initial investment is the seed, and the returns you get are the fruits and seeds for more trees. Now, you might be thinking, that sounds great, but it also sounds like it takes a long time. And you're right. Building generational wealth is not a sprint, it's a marathon. It's not about making a quick buck, but about investing wisely and patiently over a long period of time. It's about understanding that the market will have its ups and downs, but in the long run, historically, it has always trended upwards. You're not just investing for yourself, but for your children and your children's children. It's about leaving behind a legacy, a cushion that allows future generations to take risks, to innovate, to dream big, without the fear of financial instability. So, it's time to change our mindset. Let's stop thinking about quick returns and start thinking about lasting prosperity. Let's become not just investors but builders of generational wealth. Investing in the stock market is not about getting rich quick, it's about building wealth over time. So, let's quickly recap what we've learned today. We began our journey with a simple question: what is the stock market? We discovered that, at its core, the stock market is a public marketplace for buying, selling, and trading stocks, pieces of ownership in a company. These stocks are listed on various exchanges around the world, and their prices fluctuate based on supply and demand, driven by a company's financial performance and the economic climate. We then waded into the process of trading stocks. We learned that to begin trading, one needs a brokerage account. Through this account, you can place orders to buy or sell stocks. We also explored the two main types of orders, market orders and limit orders, and the role they play in trading strategy. Our journey then took us to the current market scenario. We discussed how the stock market is influenced by a multitude of factors, from geopolitical events to corporate earnings reports. We also talked about the importance of keeping an eye on market trends and indicators to make informed trading decisions. Finally, we touched on the concept of generational wealth. We learned that the stock market isn't just about quick profits, it's about long-term investment, and the potential to create wealth that can be passed down from generation to generation. It's about changing our mindset from short-term gain to long-term growth. In essence, the stock market is a tool. Like any tool, its effectiveness depends on how well you understand and use it. It's not a get-rich-quick scheme, but a platform that, with patience, knowledge, and a bit of risk tolerance, can help build substantial wealth over time. And there we have it. A brief overview of the stock market, the process of trading stocks, the current market scene, and the concept of generational wealth. Remember, the stock market offers an opportunity to grow wealth over time. It's not a gamble, it's an investment in your future.